South African investment bank and asset manager Investec has said it expects flat first-half profits. The group blamed higher bad debts and weakness in its property and investment banking activities. In a trading update, the bank said it expects pre-tax operating profit for the 6 months to the end of September to be in line with the 228.16 billion pounds it reported last year. Investec recently announced plans to buy British investment bank Evolution for $374 million. On that note, gentlemen, I'll welcome you to the program. Thank you so much for joining us. Investec Limited, a PE of 11, a market cap of 13.3 billion and a dividend yield of 4%. Stephen Kossef, the CEO of Investec, seems always to have a little bit of optimism within his voice, and he is not convinced that we could see a recession or even a default coming through from Europe. And it's quite evident in his actions because we've seen quite a few acquisitions over the past while. Gerbrand, let's kick off with you.
Yeah, look, just to come back to the acquisition side, we know that they had a bit of a lazy balance sheet. People were worried about it. There's about 10 billion on their balance sheet sitting. We know that the recent acquisition is about 2.6 billion, so that would bring its cash down a bit on the balance sheet. Probably not a bad time to buy some other companies out. It's a difficult time. People are probably priced for some of the banks for bankruptcy. But on a 11p forward, 7p and a dividend yield of 4.9 going forward for next year, if they will be able to deliver, that's something else. We know that they had a bit of trouble in some of their operations, but 4 of the operations across the board better than
You've got to be concerned about, going back to your question on recession and worries about that. When you've got to look at the banks, if you look at the big banks like SocGen, they're down 78% in the last 6 months. Deutsche Bank down 56% the last 6 months. They're looking like a debt spiral in what we saw with
But they
Lehman's.
have exposure to peripheral Eurozone debt, and something that actually Investec has very minimal of.
They've still got exposure in Europe, and they've still got exposure in with the PLC in the UK. So I think they've still got into that European exposure. So I don't think any of our banks
immune.
I don't think any of our banks are completely immune from that exposure.
Yeah, if you look at the previous set of results when they brought it out, there was about 5% of Irish debt that they carried in their portfolios, especially in the UK portfolio. But I think that's already been written off and taken care of. So I'm not too concerned, but as a share price, I think they will still stay under pressure with some of the banks in Europe as well. That's a theme that's been going on. But I think, does it look like there's maybe value at the moment? Certainly we think so, but I think it's going to take time for them to realise the value.
Well, I'm glad you mentioned Ireland, because he did actually comment on Ireland today, and we were looking at the impairment ratio right now sitting at 0.9%, and that's down from 1.3% in March. So it is looking better, but he did say that Ireland could be a big issue going forward, so it could mean a slight increase in that number, but he's confident that Ireland will be able to deal with their problem.
I don't think any of these European countries look like they're going to deal with their problem. I mean, the ECB announced today that they're looking at a dollar liquidity structure over the next 3 months, and that's obviously targeted at these European banks because they don't want to see these banks default further. And that is going to be a major problem faced with any of the banks, especially with the banks in South Africa, is what's happening in Europe currently with these European banks.
Okay, so what is your sense, Gerbrand? Do you think that Investec is in good stead? Because we know Stephen Kossef has actually gone through tough times before, and it seems that he's got a strategy in his mind. Is it going to work in his favour?
Yeah, look, they've shown over years that they are a great management team. The right way of looking at these banks locally is, all across the board globally, is price to book ratios, and they're close to 1 at the moment, which makes them the cheapest in the South African hemisphere. If you can withstand the risk of Europe, then certainly they do tend to look like lots of value. Their long-term price-to-book ratio is about 1.4.
So what is your sense with regards to Williams de Burgh? I know they're quite excited about that acquisition, and Stephen Kossef was also speaking on operational risk that the company's taken on, and not so much market or financial and trading risk, so to speak.
You're talking about the property book in
Evolution?
Australia.
No, Evolution.
The Evolution on the private banking side, on the UK side. Look, I think if you look at what their strategy is over the last year or two, they've looked away, moving some of their capital away from capital-intensive projects more to the private banking space, which is probably the right way to go at this stage. There's much less risk in that from a strategy point of view. So I think they're doing the right things from a management team. How Europe will play out is something else.
But let's go back to the management team. It's got an old team. It's a team coming close to retirement.
Succession plans, right?
Well, what's the new generation going to bring through? There's a problem. There's also been a big problem is that they've been growing their deposit quite aggressively. since the subprime and the whole recession, and maybe being a bit over conservative comparing to other banks. Maybe these new acquisitions are a way of getting out of that conservative nature and looking at more growth. But some issues there that one would have to look at and take into account when buying the stock.
What about the cost to income ratio? It's sitting at 66%. It's quite high at this stage. I suppose it's quite different from the normal banks here in South Africa because it is an investment bank, so you do need to employ more people to offer that.
Yeah, it's a specialized tailored service, I think, and that is what their niche market tailors around, and that's why people invest with them. So I think that is an attribute to what they've got compared to other banks. But I think that also is going to prove a bit of problems going forward as well.
Gerbrand, let's also take a look at some possible regulatory changes. The Independent Commission on Banking in the UK, we know that they're starting to look at the retail banking relative to investment banking side of things. And again, it seems that Investec is on the ball with this, and they are assessing the situation and saying, well, they are flexible enough to deal with new changes.
I think they mentioned it as well today. They're ring-fencing some parts of the business away from some of the other businesses, and I think their structures will allow that to be positive for them going forward, and I think they will be able to accomplish that. Just to come back to your cost to income ratio, I think one of the difficulties that they had there over the last 6 months is because they acquired Rensburg and Shepherd, they took on a lot more headcount on that side. So over time, I think some of those people will be worked out, and we'll probably have a leaner force, and that would probably come down a bit.
Property. That's still not working in their favour.
Not my strong point.
Holding onto that side, do you think that they should be? What do you think that the next step should be for Investec?
I think the next step for Investec would be look at diversified acquisitions, which they do. So they've got the property side, they're looking at the banking space, and they're looking to diversify into many different facets. Is property the side to be in? I'm not sure. It's not one of my sectors that I follow closely, but I think that diversification acquisitions is something that's important and something that they're doing well. So maybe that is a feather in their cap, so to speak.
Property. We like global property at the moment, just because of a yield perspective. We think South African properties are a bit expensive if you look at what you can get in bonds and where interest rate cycles are, etc. But on the Australian property operations and the UK property operations, I think probably need to be bullish. You're earning almost nothing in a bank as an investor, investor, and you can pick up a 4% yield in some UK and Europe properties.
So you're saying Investec should be, gearing up on the property side of things?
I won't say financing them, but certainly on owning the properties and so forth, they should be fine on that side.
Hot or not for you, Gerbrand?
I think if you look at valuations and price to book, you must probably go hot on the stock.
He says it with such excitement. He's hot. Gerbrand Smit is hot on Investec.
I think you still need caution. You need to understand the risk that they're involved in.
Yeah.
But certainly from a valuation point of view, hot.
Hot. Okay. And for you?
I like the dividend, and I like the aspects that the new acquisitions. My concerns is the general market, and I'm worried about where the market's going, especially in the banking sectors. And for me, I can't buy it right now at these levels, so I would wait.
So Travis, I mean, are you of the view that we could actually fall into a recession? Are you of the view that we could see a default?
I hate the term recession because I'd like to know when, where you define getting out of the one to the next. But I think it does look like the markets are looking like they want to roll over. There's it's almost like, I think you use the expression, kicking the can down the road. And we've got problems with Greece, 99% that they're going to default again. There's problems there, and with those problems, I think the banking sectors are one of the sectors I would tend to stay away from. And unfortunately, I like Investec as a business, and their model is good. But right now, I can't buy banks.
Are you saying that you don't have any exposure to banks at this stage?
I do, but I'm short. I'm short ABSA,
and
I'm short First Rand. So I have got exposure, but I'm short. So I think if you look in the long term, if you want to have it in your portfolio for the dividend, then great. Obviously, guys like to have the bigger banks in their portfolios over the long term. But if I'm technically short, I'll be short these stocks.
Of course, we do have a trader in the room today, so right.
A different spin on things, unfortunately.
Outsourced business support services company Mvelaserve said that headline earnings per share increased 42.2% to 159.8 cents for the year to the end of June. A maiden dividend of 36 cents per share was declared. Mvelaserve listed on the JSE in November last year. And just looking at some of those numbers, market cap of 1.5 billion rand, a PE of 17.4, and as I mentioned, no dividend yield, but a maiden dividend of 36 cents per share. Travis, let's start off with you. Of course, unbundled from the Mvelaserve group. And we know that many are saying that it possibly looks like a bit like a conglomerate, maybe like the likes of Bidvest. It's got that really strong cash position, the likes of Protea Coin, offering the cash, and then that you could use to acquire more companies.
Yeah, I mean, it's one of these stocks that I don't actively watch because it's trading at a very, very low price and it doesn't offer much value for us as traders. But looking at it, it's got a lot of different things in its book. It's got security, catering, it's got cleaning, it's got gambling. It's got a bit too much, and like you go, Bidvest, looking at another Bidvest. I know that they have looked at separating the cleaning and the catering away from it because it didn't make them the money, and the way the money is in the coin and the Protea, and they've looked at a couple of new deals in that. So it's an interesting mix. For me, very early days to look at the stock, and it, their balance sheet looks very, very complicated because it's still interlinked with the group, and I think they're still paying, and there's still a lot going on.
So
there.
not much clarity from a financial
I'm battling to
perspective.
find clarity in the business.
I'm glad you mentioned the catering side of things, Travis. So give me a sense in terms of what you think. We've got two divisions, two main real divisions, the catering side and the Protea Coin. We know the one is obviously far more of a stable entity within the company. Catering, do you think they can turn the business around? They're starting to restructure things. We saw a loss of 32 million rand from a profit of 15 million rand the previous period.
Yeah, that's something I picked up as well. I think there was two decent business sectors that they are in, and then there's two or three other ones that's actually making losses at the moment. So from a PE valuation point of view, if you take today's headline earnings per share that came out, the stock is actually trading at about a 7 PE and about a 3% dividend yield, which looks very cheap relative to the market. But I think your main concern is what are they going to do? Are they going to be able to get economies of scale in their catering business, like you said, in their cleaning business and some of the other businesses? And then the interesting part is that they, if it's government connections or whatever, they are starting to go into potholes repairs as well. They bought a small company.
That's a very lucrative
on
business.
that side.
There's lots of that.
Where there's
Fixing
probably
potholes,
upside.
yes, indeed.
But it's a well-diversified group with a lot of small stakes in small companies.
I also spoke to the CEO a little earlier, George Ferreira, and I also asked him about the facility management services side of things. And we saw a profit previously of 166 million rand, and then that falling to 105 million rand. They have subsequently re-signed and renegotiated with Telkom. We know that the previous terms weren't that lucrative for Mvelaserve. He didn't give me much detail on it, but it seems that it is working to their benefits at this point. Are you convinced, Travis?
I like the fact that that they've seen their profits rise about 47% in that coin Protea segment. I like that they're looking at restructure or retrenchment in the catering and that business. But for me, I don't really know enough about it. I haven't analysed it enough to really know the stock. But there's a couple of concerns that I have with the structure and with the group.
What is your sense with the Telkom contract?
Yeah, look, that's good for that part of the business. It will only take time to really see if it's a better organised deal than previous one, lucrative for Mvelaserve or for Telkom. I think with first sight of their statements today, my main concern was that there's one great business in a lot of other fragmented businesses.
But that's a conglomerate, right?
Certainly, but
Isn't that what they do?
Yeah, certainly, but I mean, you don't want companies that making losses, and you're sitting with those companies, sitting with those cost structures. If you could buy the Protea side on
They've even
its
got
own,
an IT company that they've just an acquisition in IT for 81 million or something, and that's another add to your group.
Absolutely. Okay, so we know that they're also possibly looking into Africa. Travis, hot or not for you, Mvelaserve?
I'm going to say not hot.
Not hot, not even from a trader's perspective. Not even.
If I tried to trade this, I think I'd be sitting it for a while. Now, I think let's give it due. It's early days in terms of a stock from November. I'd like to sit and watch it. It had some interesting stuff when I was looking at it, and it's something I'll definitely watch, and for the future, definitely keep an eye on.
Gerbrand.
I'm going to go for not hot. Also keep an eye on it. It doesn't look expensive from a valuation point of view, but I would probably prefer them to have a bit more focus in some of their businesses.